So this is USD CAD 1 hour time frame, May 2025 price action, and I'll be using it to showcase the true or the pro way to map true SMC market structure. And so without further ado, let me dive in. By now, I want to believe that each and every one of you knows that when price creates consecutive pullbacks to the downside, and by pullbacks I mean valid pullbacks, and then price retraces and takes out one high, by that I mean the recent high, then this one here will be a confirmed swing point in such a way that if price now reverses and breaks past this one, then this one here will be a confirmed bearish break of structure. This on these highs of these valid pullbacks formed, there is some liquidity known as buy side liquidity, and this recent buy side liquidity that price retraces taking is what we call the inducement. I believe each and every one of you knows that, and so once the inducement is taken out, the swing point is already confirmed to be valid swing point, and I will only be waiting for price to now reverse and break past the swing point to confirm the valid break of structure. Right, so with knowing this, then this explains that right here you can clearly see that price has been forming valid pullbacks to the downside, and this one here is the high of that pullback, and this is the high, and this one here is the high of the recent valid pullback. Above of this recent valid pullback, there is some liquidity, buy side liquidity, and I said since it's the recent buy side liquidity is what we call the inducement. So, and I said also once the inducement is taken out, you can clearly see here price retraced, took out the liquidity that was resting above that high. This one here is confirmed to be a valid swing point. Right now, it doesn't matter how far the price goes all the way to take out this additional buy side liquidity. We are only interested with this one. Once the first buy side liquidity or the recent buy side liquidity is taken, and this is on the bearish scenario, this one here is a confirmed swing point, and I will only be waiting for price to come or to reverse and break past this swing point to confirm the bearish break of structure. Right, so this means that we are currently in a new trading range, and that is the high of that trading range, and this one here is the high of that trading range. So again, the process continues. You need to identify the recently formed valid pullback, and we are only interested with that liquidity that is resting above. So in this trading range that ranges from this high and currently ending here, but it's not confirmed that this here is the swing point because the inducement is yet taken. So right now, the next step after identifying or after price has made that break of structure is usually marking the inducement, and the inducement is literally the valid pullback, the recent valid pullback that price forms. It doesn't matter if the pullback is formed before the break of structure or it forms after the break of structure. So right here, I can clearly see that this here is the recently formed valid pullback, and above this recently formed valid pullback or above this high, there is some buy side liquidity, and that buy side liquidity is what we call the inducement. And so not until the inducement is taken out, I cannot confirm a swing point. Alright, so let me continue running price and see what price eventually does. Alright, price retraced, and instead of price actually taking out the inducement so that we can confirm the swing point, we can clearly see that price created another valid pullback, and this valid pullback is created after the break of structure. And if you do remember on my previous videos explaining about major and minor inducement, this one here that is formed before the break of structure is what we call, if the recent valid pullback. All right, let me rewind so that it may not disturb what I'm explaining. So the liquidity resting above this high of this valid pullback that is formed before the break of structure is what we call the minor inducement. The reason as to why it's called the minor inducement is because it occurred or it was created before the break of structure. I showcased this on my previous videos about inducement. I covered in detail about major and minor inducement. So if you're still having a problem in identifying or distinguishing between a major and minor inducement, you can go back into my previous videos about inducement, watch them, and then we can continue right here. All right, so right here, this here is the minor inducement, and right now I'll be waiting for price to retrace, take out the minor inducement, confirm this one as a swing point, then wait for price reverse, break past this so that I can confirm another valid bearish break of structure. But now let's see what price does. So let me run price. Right, and exactly right here, you can clearly see price created another valid pullback without taking the high of this recent one. So this means that I'm not interested with this, and I will now interested with the one that is currently formed, because the context of inducement is the buy side liquidity resting above the valid pullback, the recent valid pullback in that trading range. And this here is in a bearish scenario. That's the reason as to why I'm using buy side liquidity. So right now, let's see if price will reverse, take out this, or will end up creating another one, and so I'll continue be shifting the inducement. And in this case, it's a major inducement I'm talking about. All right, so let's see. All right, that's not a valid pullback. So right here, we can clearly see that this one here is not a valid pullback, and so I'll be waiting for a valid pullback to be formed. And exactly right here, you can clearly see that's the pullback, and price has formed a high here. So I'll be shifting this one here to the recent one, and this one here is the recent one. And so the liquidity, this buy side liquidity is what we call, the liquidity resting above this high is what I call the inducement, and in this case major inducement, because it's a after the break of structure. So right now I will only, so I said not until price grabs or takes out this inducement we cannot confirm a swing point. Right, so continuing marking structure, exactly right here we can clearly see price created another pullback, another valid pullback, and so this one here is the one that I will be using as the major inducement right now, because the keyword here is actually the word recent. It needs to be the recent buy side liquidity. Right, so these ones here are of now, though they are buy side liquidity, but the one that I'm interested in is the first or the recent one. So if price takes out this recent one, I'll be confirming the swing point. And this one here is called the major inducement because it's after the break of structure. Right, so right here price has taken out the major inducement, and once you see such, then this one here is confirmed to be a swing point. And right now I'll be waiting for price to reverse back and break past that swing point to confirm a valid break of structure. Right, so this one here is our low, and right now I'll be waiting for price to make, right now price is looking forward for further buy side liquidity, and then after that price will eventually reverse, and after that then we will be making a break of structure to the downside. But if price now decides to go all the way breaking past this trading range high, then this means we will now be shifting bias from being bearish to bullish. Right, so right now let me run price and see what price does. Alright, so right here price is retracing for more buy side liquidity. As long as price does not break past our high here, then we are still in a downtrend. Right, so, and right here you can see price is now reversing, and exactly right there price has created that break of structure that we was looking for. So right here we can clearly see that price now broke past this confirmed swing point exactly here, and you can see our high is protected. So once this happens, this one here is now our new trading range high, and we are currently in a new trading range with this one here being the high of the trading range. After the break of structure, like I said, the procedure or the process continues. We mark the recently formed valid pullback in that trading range, and we can clearly see that this one here is the recently formed valid pullback, and the liquidity resting above that is what we call the inducement. Alright, so this inducement is a minor inducement because this pullback before this break of structure. So this one here is called the minor inducement. But anyway, both the minor and the major inducement, they do confirm a swing point as well as a valid break of structure. So this one here is our inducement, and we said we confirm a trading range once we say that we confirm a swing point once it is taken out. All right, and right here price has taken out, so this one here has taken it out, and so this one here is a confirmed swing point low. And right now I'll be waiting for price to take out this. Right now I'm waiting for price to come all the way or to reverse right now and break past this swing point for me to confirm it as a break of structure, right? So you can clearly see price is reversing, and exactly right here prices broke past the swing point. So this one is a confirmed break of structure. This one here is our swing point, and yeah, that's the high of the newly formed trading range. So right here price has taken out the minor inducement, and I confirmed this one here to be a valid swing point. And also right here price took out the major inducement, and I confirmed this one here to be a swing point. So this means it doesn't matter, both the minor and the major inducement both confirm a swing point, in such a way that if price now reverses and breaks past the swing point, then that will be a valid break of structure. But now the most important thing that you need to know is this one here. Alright, so in this structure, this is just a simple diagrammatic representation. You can clearly see price took out the major inducement, confirmed this one here to be a swing point. Then price reversed, broke, made a valid break of structure, formed a major inducement here. Price reversed, took it out, confirmed a swing point. Again, reversed, broke the structure to the upside, created a minor inducement. Price, you can see price reversed, took it out, confirmed this one here as a swing point. I said both the major inducement and the minor inducement confirm a valid break of structure. So that's the reason as to why right here you can clearly see after the major inducement is taken out, I confirmed this one here to be a swing point. And right here also after the minor inducement is taken out, I confirmed this one here to be a valid swing point. So price took it out, and you can see here price reversed. This one here was a valid break of structure. But now here, this here is what I wanted to showcase. Right here you can see price created a minor inducement, and so this here is a valid pullback, and the liquidity resting below here is what we call the minor inducement, because this pullback was formed before the break of structure. So this here is the minor inducement. And the thing that I wanted you to know is that when this inducement is a minor inducement, the trading range low or the external liquidity becomes the major inducement. I repeat, if it's the minor inducement, you should know that the trading range low will be the major inducement, or the external liquidity will be the major inducement. This here is an uptrend. That's the reason as to why it's the trading range low. If it was in a downtrend, it would probably be the trading range high. So if you see a minor inducement, just know that the trading range low or the external liquidity is our major inducement. So there is some scenarios that price may decide to take out the minor inducement. So once price has taken out the minor inducement, this one here is a confirmed swing point. But then price may decide to go further, taking out the major inducement. By this I mean a sweep past this, just a sweep, just a wick below the major inducement, then rejecting the low prices, showcasing a sweep, and broke past our swing point, confirming this one here to be a valid break of structure. I mean a bullish break of structure. This one here is not a change of character, even though this one here, this is a trading range low, but at the same time is the major inducement, because price created a minor inducement. So the trading range low becomes the major inducement, or the external liquidity becomes the major inducement. This is the trading range low, and at the same time it's the major inducement. So price, you can see here, it's just wicked below. But let's say in a scenario where price breaks past that with a candle close and with a displacement, then this one here will be a change of character, and price will have shifted bias from being bullish to now bearish. But for the case where price just wicks and just reverses, abruptly breaking the structure, this is just an uptrend, and we are still in an uptrend, and then the process continues. So this is what I wanted to showcase. When there is the minor inducement, just know the trading range low is the major inducement, and this is literally the opposite in a bearish scenario. Right, so back into our chart where we were right here, we can clearly see that price has made that break of structure. So where is the inducement? Right here, this is the minor inducement, and like I said, this one here will now be the trading range high as well as the major inducement, because price has not created any inducement after that. All right, so let me continue running price and see what price does. Exactly right here, price creates another inducement exactly right there. So this means that this here is just some buy side liquidity, but this one here, this buy side liquidity is what now we'll be calling the inducement. And until this buy side liquidity is taken out, we cannot confirm the valid swing point. Alright, so let me continue running price. And exactly right here, you can clearly see price took out that. So this one here is now a confirmed swing point. So once price now breaks past that, as long as this low is protected, and now that it doesn't matter how far the price goes here up or retraces, keep on retracing, as long as it does not break past this one, we are still in a downtrend, and I'll be waiting for price to now reverse, break past this swing point for me to confirm another bearish break of structure and also confirm the new trading range. Alright, so right here we can clearly see price is right. So price, as you can see, it kept on retracing up. Right here you can see price kept on retracing, took out further buy side liquidity. Right here you can clearly see took out further buy side liquidity, mitigated this POI, and right now it's actually reversing, and I'm anticipating that price will end up breaking past our swing point. Alright, so let me continue running price, and exactly right here you can clearly see that price made it out to the external liquidity. So in this case then we are currently in a new trading range. Exactly right here you can clearly see that price broke past the swing point here. Price broke past the swing point, and this one here is our trading range high as usual. And exactly here after the break, where is the recent pullback? You can clearly see that this is the recent pullback high, and the liquidity resting above this high, this buy side liquidity, is what we call the inducement. Right, so I will be waiting for that to be taken out, and this inducement in this case, it's a minor inducement because it was formed before the break of structure, or it occurred before the break of structure. Right, so let me continue running price, but then right here we can clearly see price ended up creating another valid pullback to the downside here down. All right, so let me rewind so that you can clearly see what I'm actually talking about. Exactly right here, you can clearly see price created this pullback and again created another valid pullback here, but we are only interested with the recent one because the liquidity resting above the recent one is the one that we are actually interested at, which is of course the inducement. And since this valid pullback was formed after the break of structure, then this inducement is called the major inducement. All right, so right now I'll be waiting for price to take out this major inducement for me to confirm the swing point. And right here after running price, you can see price skyrocketed up, took out the major inducement, and right now I can confirm. Alright, so right now I can confirm this one here to be a valid swing point because the major inducement or the inducement is taken out. And I said it doesn't matter how much further price retraces, taking more buy side liquidity, as long as price has taken out the recent one. This one here is already a confirmed swing point. And if price now reverses and breaks past this one here, then this one here will be a valid break of structure. Right, so we can clearly see where our trading range high is. We need to protect this high. Price should not break past this trading range high. Alright, so let me continue running price, and exactly right there price broke past the swing point. So this means that now we are literally in another trading range. Yeah, exactly right here we are currently in a new trading range. So let me mark the new trading range because price has broke past the swing point. This one here is the high, and so that's the high of the trading range exactly right there. And where is the inducement? Actually the inducement is this high because there is no any minor inducement, so we are actually having the major inducement as the trading range high, not unless price now creates another valid pullback. And right, let's see what price does. Eventually price creates another valid pullback. Right here you can see that's a valid pullback, so this here is the high of the valid pullback. And also I can clearly see that price created another one here. You can clearly see price created this, so this one here is our valid pullback. This is just some buy side liquidity. Now the buy side liquidity you are interested in is this one because this buy side liquidity is the major inducement. Why major? Because the break of structure was right there, and this inducement, I mean this valid pullback, was formed after the break of structure. Alright, so right now I'll be waiting for its retracement, and it said once price has taken out that one, this one is a confirmed swing point. And so now if price retraces and breaks past the swing point, then that's a confirmed valid break of structure as long as this high is protected. Alright, so right now let me continue running price and see what price does. Price is alright, price headed further for more buy side liquidity. Alright, I can clearly see a break, I can see a sweep here for the external liquidity, but right now you can clearly see this here was a major inducement, so this means this one here is the trading range high and this here is a break by a wick. In this case, I usually confirm that to be a first sign of change of character because it's a break past the trading range high. Right, so let's see what price does, and exactly right here you can see price made that change of character. So this means now we have changed bias from being bearish to now being bullish. So right now we are currently in an uptrend and the process still maintains to be the same. Right, so we are currently waiting for the valid pullback. All right, so before price created this pullback, so before price created that pullback, I mean after price has just made that valid break of structure, where was the inducement? Alright, so this one here is not a valid inducement. I mean this one here is not a valid inducement because this one here is not a valid pullback. We need a low of a valid pullback. So this one here also is not a valid pullback. So the low that I'll be looking forward for is this one here. So this one here is our major, I mean minor inducement because it was formed before the break of structure. Alright, so right now let me continue running price. And exactly right here we can clearly see price created now other valid pullbacks on after making the valid break of structure. So this now becomes just a random sell side liquidity, random sell side liquidity. Now this one here is the inducement because this one here is the recent sell side liquidity. Not until now price creates another one, since this one here becomes the inducement and these ones here become just random sell side liquidity. Alright, so right now let me continue running price and see what price does. And as you can see, price created even more pullbacks to the upside, so we'll keep on shifting to the recent one. So this one here was the valid one, and then price created another one here. So this here is the recent sell side liquidity, and that now will be the major inducement, and not until it's taken out we cannot confirm a swing point. So if this means that if price now creates another one, then I'll be shifting to the next one. All right, so let's see. All right, eventually price took it out. You can clearly see here price retraced, took it out, so I can now confirm this high to be a valid swing point. Right here you can clearly see that price reversed, took it out, so I can confirm this high to be a valid swing point in such a way that if price now reverses and breaks past that, that's a valid break of structure. Alright, you can clearly see right here price took out the major inducement, yes, but this retracement is made up of two retracing candles, I mean two bearish retracing candles. But in this scenario, when there is only like two retracing candles, I will not confirm this one here to be a valid break of structure. And I explained this that once this happens, you will be shifting this inducement to the newly formed low. So this one here becomes the major inducement, and this high transfers to this one here. So this one here becomes the newly formed high, and this one here, I mean this one here becomes the swing point. This one here becomes now the sell side liquid that we'll be looking for, that is the major inducement. And right here you can see the major inducement is taken out, so this one here is the trading range high. And right now if price now breaks past that, and you can clearly see now the retracing candles, there are more than three. So this here is now this one here is up. So this means that this one here will be now a strong. So this means that this one here will be a valid break of structure. Alright, so right now it doesn't matter how further price retraces, taking out further sell side liquidity. I mean taking further sell side liquidity, as long as this first one is taken out, this one here is already a confirmed swing point, and if now price reverses from where it is and breaks past this one, I will confirm that to be a valid break of structure. Alright, so price as you can see headed up and made that break of structure. So this one here is our trading range low, and we are currently in a new trading range. So right now, where is the inducement? This one here is the inducement, and that case is a minor inducement because it was formed before the break of structure. All right, so let me right, and exactly right here I can clearly see that price created another inducement exactly right here. So this one here is the recent inducement that price creates, and if price creates another valid pullback also, I'll be shifting to the next one. Alright, so let's see, and exactly right there price created another valid pullback, so I'll be shifting to this one because that's the sell side liquidity I'm looking forward for, and that's the major inducement. Why major inducement? Because it was formed after the break of structure. Right, so again price created another sell side liquidity without taking out the initial one, so this one here becomes now our major inducement. We need to shift to the recent one because the recent one is the one that is called the inducement. I mean, the liquidity or that sell side liquidity is what we call the inducement on that recent valid pullback low. Alright, and exactly right there, price took out the inducement, and you can clearly see the retracing candles. They are more than 3. So this means that this one here is a confirmed swing point, exactly right there. So if price now reverses and breaks past that, that's a valid break of structure. Right now, it doesn't matter how far the price retraces to take out further liquidity. You can see price took out the major inducement plus additional sell side liquidity. You can see additional sell side liquidity, and probably right now it has got the momentum to reverse breaking past our swing point. So let's see what price does. And right here you can clearly see price retracing. All right, now this here is now another scenario that exactly right here you can see price took out the major inducement, and I was anticipating that price will literally come for more sell side liquidity and then reverse while protecting this low. But currently we can see that price wicked below this low, and like I said, when you see that there is a major inducement, so this means this trading range low is not the major inducement. Not until like there was a minor inducement, then our trading range low will be now the major inducement. And so if we see such a wick, then that will be okay. That will not be a change of character. But right now here, this here is a major inducement. So this means this here is our trading range low and strictly our trading range low. So if price breaks past that with a wick or a break by a candle close, that's an early sign of a change of character. Even though price broke by a wick, yes, I understand, but in this case, this is a change of character. All right, so this means that we are shifted bias from being bullish and we are currently bearish. So this means now we are in a new trading range that ranges from this high and currently here. So now let's mark our inducement. Right here I can clearly see on this trading range that this one here was the recently formed valid pullback, and that pullback, the liquidity, the buy side liquidity resting above that high, that's the minor inducement. Why minor? Because there is no any pullback that was formed after this break of structure. This here is the recently formed valid pullback before that break of structure. So that's the inducement, and in that case, minor inducement. And we can clearly see that price retraced and took that out. Right here, you can clearly see that price retraced and took that out. And right now, it doesn't matter how much further price goes deeper, taking out this further buy side liquidity, as long as the recent one is taken out, then I can confirm this low here to be a swing point. And right now, if price now reverses and breaks past this low, then that's a valid break of structure. All right, so let me run price and see what price does. All right, so exactly right here, let me remove all this. So this one here is our low, and this one here was our minor inducement, and right there price has already taken that out, and I can see additional buy side liquidity here. So let's see what price does. Will it go for further buy side liquidity or will it reverse? All right, so exactly right here price is heading for further buy side liquidity, and let's see exactly. And then after that, you can clearly see it's now reversing, eventually breaking the structure to the downside. So you can clearly see that in this scenario, even though it was a break by a wick, it is now a valid break of structure. So right now we can clearly see that price has taken out the inducement plus additional buy side liquidity, and I said it doesn't matter minor or major, all of them confirm a swing point, and as well confirming the break of structure, and this is a bearish break of structure. This one here is our new swing point, so meaning that's the high. And right now we know after the break of structure the next step is usually marking the inducement. So into our new range here, where is the inducement? And in this case I can clearly see this here is not a valid pullback, and so the valid pullback is this one, and this pullback was created before the break of structure. So this means that the liquidity resting above here, this buy side liquidity, is what we call the minor inducement. Alright, so let's see what price does. Let me run price and see what price does. You can clearly see price is now reversing, and it didn't created any other pullback. And exactly right here, and this is what I was talking about. Right here you can see this is the minor inducement, and right here price didn't created any other pullback, any other valid pullback after the break of structure. And I said that if it's a minor inducement, then the external liquidity is the major inducement. And this case you can clearly see our trading range high, of course that's the external liquidity, and that's the major inducement. And you can clearly see here this here is a sweep because price wicked above and rejected abruptly. In this case, this here is what we call a major inducement sweep, and this is not a change of character. That's something that you should note. But in this case, you can see this here is a minor inducement. You can clearly see this is a minor inducement, and I said if the minor inducement, then the external liquidity will be the major inducement. And so if price goes further, taking out the major inducement or taking out the external liquidity, by a week, just a sweep, and then reverses, in this case, then this one here is not a change of character, but just a sweep of the inducement, and this one here is obviously a swing point. And right now if price comes all the way here, then this one here will be a bearish break of structure, and we are still in our prevailing trend, that is bearish. Right, so right here, as you can see, price is heading down, and probably it will break the structure to the downside. And exactly right there you can clearly see that price broke the structure to the downside. So this is something that I wanted to showcase, very, very important. Right here you can see these two scenarios. Right here you can clearly see this scenario had a major inducement, and that's the reason as to why the break by a week, in this case I confirmed it as a change of character, because this trading range had a major inducement. But in this trading range there was no major inducement, and the inducement that was there was a minor inducement. So this means that the external liquidity will be the major inducement, and so price decided to take both the minor inducement and the major inducement. And in this case it needs to be a sweep, and we can clearly see price wicked above, rejected, and moved abruptly towards the swing point. This swing point was confirmed after price took out the minor inducement. So once price took out the minor inducement, this here was confirmed to be a valid swing point, but then price went further, taking out the major inducement, and then reversed, breaking past the swing point, confirming a break of structure. So guys, I will be ending here. I believe this here was a masterpiece of marking market structure, and this works in every time frame, in every pair, in every asset class. So yeah, practice marking structure this way and everything will be easier.